Let's start with United. Earnings coming up later today. What are your expectations for the report, and what is your price target and rating?
Yeah, certainly. So to give you an industry answer on that, we are generally more constructive on the large network carriers than we are the ultra low cost carriers. So if one looks at the various puts and takes to the network carriers' advantage, you have international long haul, you have this post-pandemic pivot into economy plus type seating in the cabin. You've got a co-branded credit card revenue. Those drivers continue to be very important. And we think, for example, we're going to continue to see strong trends like we saw with Delta Airlines recent release, which the market didn't appreciate so much. But
all right, so
fundamentals look very good.
All right, so you're continuing to expect more upside. Just by the way, the average rating on the street, 60, 65. You're more bullish than that. You also have a buyer rating on United. I want to talk to you about Boeing. How big of an issue is this for the airline sector, really? A couple airlines are impacted. We're talking Alaska. United's also impacted, so Southwest. But industry-wide, how impactful will this be?
Yeah, it's important. And the industry has not gotten a break from the supply chain issues, whether it's the MAX 9 problem we have now. We have this fan blade issue with the Pratt & Whitney their turbofan engine. So the planes are still not in the air. Everybody's still waiting on the FAA to give the green light on when we can get these planes back into service. So meanwhile, while we have these aircraft on the ground, there's revenue spill associated with that, which looks like it's going to be short term. And probably we get past this particular issue over the short term. But it's a little concerning that we're not done with the supply chain problems.
So I want to talk to you about something that appears to have more long-term impact, the failed merger between JetBlue and Spirit. I was actually speaking to Ed Bastian a couple weeks ago. He said the airline industry used to be a race to the bottom of the lowest fares. Now it's all about being able to offer optionality. That's what he called it. How does this failed merger, how does it change things? Does it change things at all? Are we making a big deal about it here on CNBC and it's not a big deal? Or will it have ripple effects?
Yeah, great question. So I do think that when, Mr. Bastian's comments make a lot of sense. Which airlines are actually doing well now? It's those airlines that are offering something well beyond main cabin, whether it's premium cabin, a co-branded card, loyalty program revenue. We've seen a post-pandemic pivot away from no-frills seating. Most people are no longer in the office 5 days a week. This pre-pandemic pattern of fly out Sunday night, fly home Thursday night, be in the office on Friday, that's kind of gone, not entirely gone, but it's broken down. So that shift, that demand has moved away from ultra low cost. At the same time, U.S. doesn't have the air traffic control capability for a lot of airlines to do these maintain these very high block hour utilization, like you saw pre-pandemic. So, that business model is in a tough spot.
Are we seeing the low-cost carriers go away? I mean, is this failed merger, is this a sign that we may not see any more of these low-cost carriers?
I don't know if that whole subsector disappears, but I would imagine that subsector is going through some soul searching. And, if one simply looks at pre-tax margins, they used to have very high pre-tax margins pre-pandemic, and they were better than network airlines. We're now seeing exactly the opposite.
All right.
For some of those reasons I outlined, no frills passenger service is
thing of the past.